Do you want the enhanced economic benefits of investing into alternative investments like private equity funds without the lockup period? Welcome to Interval Funds. Kimberly Flynn explains.
Much of the private fund space is a 10-year term or a 12-year term.
Yep.
You buy it and you have to hold onto it for 10 or 12 years. Well, that's not very convenient. What if I have like a 7-year investment horizon? So you can buy a private equity interval fund and you can hold it for 3 years, 5 years, 7 years. And then when you decide to sell based on your preferences and your liquidity needs, then you would sell it at a quarterly interval. So at quarter end, you'd get liquidity. And that's the big difference between a mutual fund, which is a daily in, daily out. You can go in and out of a mutual fund or an ETF. ETFs, you can do intraday trading. But these interval funds that house illiquid private market assets, you can only go out on a quarterly basis. And then there's a limit. So the portfolio managers provide, typically it's 5% of the portfolio. They get it ready to be liquid. So if customers want liquidity, if more people want out than that amount, then you'd be prorated. So that's the challenge, is that if you, let's say it's April of 2020 and you want out of the fund and you want to liquidate, well, you're going to be prorated and you're probably going to be stuck for a couple of quarters. And nobody likes to hear that, well, I don't know when I'm going to get out of this thing. And if,
Right.
I think as a real estate investor, there's been a lot of real estate investors that have been frustrated being gated or being prorated in some of the non-traded REITs. And part of the reason they do that is they don't, the portfolio managers don't want to be forced sellers. So it is one of the big, trade-offs with these investments. You have the potential for higher return, higher yield, diversification, but there are, specific product features that you're like, hey, I can't live with that, or that's not something I'm comfortable with. And that's a really important trade-off. The whole category of these products is called semi-liquid or evergreen products because they don't have set terminations. And so therefore you need to understand when you're going to be able to get liquidity and how.